Hey guys, hopefully everyone is doing well. Today's target is to understand this word accounting but as a subject. Before that, let's suppose you have heard this word accounting for the very first time and you have not even have any idea about it. It's the first time when you have heard about accounting. No previous knowledge is supposed. I'm assuming that the student or the listener of this video has no idea about the accounting. So we are starting it right from the scratch, right from the first word, right from the first page, right from the beginning. So there is no need to bother whether we have any previous knowledge or not. Accounting is basically a subject. If we are dealing it in education sector, like other subject, it has a purpose. Every subject will let you learn something. Similarly, accounting as a subject will let you learn something. We have mathematics, we have English, we have linguistics, we have chemistry, biology, physics. There are so many subjects present, and every subject will let you learn about a particular and specific subject. For example, if you are studying biology, you will study about life. If you will study chemistry, you will study about chemicals. If you will study about physics, that will help you to learn about machine. In the similar manner, accounting is still a subject. So what we can learn from accounting? For that purpose, we will see how this word has come up. Account is the word from which we have taken the word accounting, and account is basically a record. The first thing you will understand is accounting is a record. Means, if let's say you have received 500 rupees from someone, or you have sold your mobile to someone, you have bought a TV, and you want to memorize it, you want to write it down anywhere. Let's say on your copy, on your paper, you have written, I have purchased a mobile for rupees 40,000. It's just an example. So what you have done, you have recorded that transaction. So account, basically it means a record. Record of what? Record of a transaction. Now second word is more important. Transaction mean give and take of anything. For example, you have bought a mobile. So what you will do, you will pay. Something is going out. Amount is going out from you. 40,000 was the price, so you have paid. It means 40,000 is going out. And in return, what you are getting? A mobile. So give and take is happening over here. You are giving 40,000 and getting the mobile. So it would be called a transaction. When you will record this transaction upon a paper, that record would be considered as your account. So account is called a record of transaction. So what would be the accounting? The word accounting. This is a subject which will let you learn how to record the transaction. So now we can make its definition. As an accounting, we will say accounting is a subject which deals with recording of transactions. I have told you, if you are studying chemistry, what will you learn? You will learn how to make chemicals. Accounting again is a subject which will let you learn how to record the transactions. And transaction, we have discussed, is give and take of any commodity, any thing, or any valuable element, give and take. So dual transaction, when you will make, when you will give and take of anything, and you are going to record that transaction, that record would be called accounting, and that record would be called account. And accounting would be the subject which will let you learn how to record different transactions properly. Alright, so now we will proceed. Since we will learn how to record the transactions, so there must be some rules, there must be some ways, there must be some format to record these transactions. Initially, you can stop over here and revise in your mind what we have discussed. Just keep your mind that accounting is a subject which deals with recording of different transactions. Transaction mean give and take. When you are giving something or in return you are receiving something, it's a transaction. You will record this transaction, and how you will record this transaction, this subject accounting will teach you. Secondly, we are proceeding to next, as accounting is purely related to commercial activities. That means we will be dealing with two type of businesses. We will directly be associated with business. One business which is providing services. So we are dealing with businesses. One business would be the service business, and second business will be manufacturing, or you can call it trading. Both businesses are same. So if you are giving services, dealing would be different. If you are manufacturing, dealing would be different. Let's discuss with trading or manufacturing. There will be two aspects related to manufacturing. First, you will purchase, and then you will sell. You will purchase a commodity, and then you will sell these commodities. For example, you are, again we can take the same example. If you are selling your mobile on a shop, you will buy a few numbers of mobile from wholesaler or from manufacturer. You will keep these mobiles on your shop. So this way you have completed your purchase. After keeping these mobiles on your shop, you will start selling these mobiles to your customer. So it would be considered as sale. A manufacturer will purchase and sales. For this purpose, you have an idea about purchase and sales. In this process, we will be dealing with four major aspects of accounting. These are called pillars of accounting. In manufacturing concern or in service business, this phenomena would be considered same. What we will do, we are now discussing the pillars of accounting. Very first thing which you will understand is called assets. There are four things I was discussing which are important in accounting. First thing we are discussing is asset. Asset are valuable things. The first thing you know is assets are valuable things. Secondly, they have some future benefits. What we are discussing, assets are valuable things which have future benefits, and these are normally retained in business. So let's understand these three factors: valuable things, future benefits, and retaining in the business. We can take example of a cloth merchant. Let's suppose you are selling cloth, you are selling mobiles, you are selling books, any example you can take. So there are some commodities, some things, some valuable things present in your business. You have kept those things just to facilitate your business, just to enhance your business, just to get benefit from the business, from these particular commodities. You are seller. First we are deciding it. You are a bookseller. So majorly you will be having books. For you are seller selling your books, the main thing which is present in your shop would be books. But beside these books, there will be other factors, other elements also present, like you have furniture at your shop, like you have AC, air conditioner at your shop. You may have fixtures at your shop. You may have table, chairs at your shop. You may have computer at your shop. Now consider that if a bookseller does have some valuable things which have some future benefit and he had retained. If a bookseller does have what we have mentioned, furniture at his shop, and he does have computer in his shop, and he does have fixtures mean desks or the racks within which he had placed books. If he have if he ha fixtures, computer, if he has air conditioner at his shop. Now you can see that these elements are present in his shop, and apply some conditions upon it. Are these things have some value? You will say yes. And then secondly, you will see these commodities can give any future benefit. You will say yeah, yes. And thirdly, bookseller will retain these products at his shop. You will say yes. For example, somebody had come at bookshop and saying, I want to buy this furniture. So bookseller will say, this furniture is basically not for resale purpose. I have retained this furniture to get some benefit. This is important and integral part of my shop. I'm not willing to sell it. Normally, bookseller will not sell it. These products would be retained. So all three elements of definitions can be applied upon furniture, computer, fixture, air conditioner. So for bookseller, all of these items are assets. So assets are valuable things which have some future benefit. So for bookseller, furniture is a valuable thing and it has some future benefit, because if a bookseller will not have tables, or if he does not have any chair, if does not have any rack where he can place books, so it would be impossible for him to attract customers. So furniture for a bookseller is having a certain value, it has a future benefit, and bookseller will retain furniture at his shop for a longer period of time. This means furniture is asset for bookseller, computer is asset for bookseller, fixture is asset for bookseller, air conditioner is asset for bookseller. There might be other things also present. For example, if he has his own building, he owned the building, shop building, that would also be his asset. Why? Because that building does have some future benefits, and obviously building has some value, and bookseller will retain this building for the longer period of time. Building would also be considered as asset. And if he does have any machine, maybe a photocopy machine, or maybe binding machine, if he have some machine, I'm saying that maybe a photocopy machine, you can call it. Now please make your mind, these are the things which every element, every item over here which has been selected, all of these elements does have some value and they have some future benefit, and these products will be retained by the owner of the business. So these are assets. So first pillar which we have discussed, assets are valuable things which are retained in the business to get some future benefit. First element we have completed and we have taken examples as well. Second element now we are going to discuss is expenses. So how would you define expense? Normally everybody, maybe student, or if he is not student, he is well familiar with this name, expenses in business. How would we call it? First of all, these are payments. We are making some payments for what purpose? To operate the business. These are payments to operate the business. First pillar we have discussed assets. Second pillar is expense. Expenses are payments made to operate the business. Look, when you will buy an asset, for example, bookseller had bought the furniture. First element is acceptable for expense as well. We have made the payment. Similarly, you will pay some payment to buy asset. But second is very important, to operate the business. Furniture is not the business product. For a bookseller, books are his product, commodity or merchandise, and books are bought for the business, for trading. Bookseller is not a trader of furniture. Please try to understand, when he is making any payment to buy furniture, that furniture would not be purchased for the business or for trading. Bookseller is a trader of books, and he will make payments for books if that payment would be considered a payment for operations of the business. We are now taking the example of expense. Then I am very hopeful you will understand the difference of payment of asset and difference of payment of expense. You will come to know. Let's say he is paying rent of the shop. So rent paid. This is example for expense. Or we can write as well, he is a bookseller. So taking example of book, bookseller is paying or paid electricity bill. This example we will take later on. Rent paid is also an expense, but let's take an example of electricity bill. Now you can see, when bookseller have made any payment to buy the furniture, furniture was not for the trading purpose. Furniture was to be retained in the business to get some future benefit. Now again, bookseller is paying for what? Electricity bill of the shop. This amount has been paid, electricity bill of shop. It is necessary because we are related to business. If electricity bill is being paid for the shop, payment has been made, but this payment is purely associated with operations of the business. That electricity bill was paid for the shop, and shop is directly associated with trading and the business. So bookseller, when he is paying electricity bill, it would be considered expense of bookseller. Why payment of furniture purchase would not be considered as an expense? Because furniture would be retained in the business. Bookseller is not trader of the furniture. When bookseller had paid electricity bill for the shop, it means that payment has been made for operations of the business, to continue your business. So there is a bit difference between asset and expense. When you have made any payment to operate the business, it would be called uh, expense. Another example of expense we can take, if bookseller is paying some taxes, or bookseller had paid salaries. Salary, the amount which is paid to the employee. So bookseller is paying salaries, bookseller is paying taxes, bookseller had paid insurance. Or if in case we have said that he had bought that building, bookseller had bought the building. For example, if somebody had not bought the building and business is being operated on rental shop, so in that case bookseller paid rent. This would also be considered the expense. You can see that these are examples of expenses, and you will keep it in mind. These are examples of assets, and here we have discussed expense and assets. Two pillars we have discussed, and you will make your mind to understand the concept of assets and expense. So collectively, assets are valuable things in the business, but they will retain these products and items to get some future benefits. A bookseller does have furniture, AC. These products will be retained in the business to get some future benefit. Expenses, another difference between asset and expense is the time period. When you will make payment for asset, this would be for the longer period of time. If you have bought the furniture, normally for 10-15 years you will not be replacing your furniture, so this would be a payment for the longer period of time. If you have bought an AC, for next 2-3 years you will not be making payment again for your AC. It means it's a payment for the longer period of time. When you will see expense, payment which you will made would be for less than 1 year. You can see that over here. You have paid electricity bill. For the next month, you will be paying this electricity bill again. If you had paid taxes for this year, next year you will be paying taxes again. If you have paid salaries, you have paid salaries only for a particular period of time, maybe a week, maybe for 15 days, maybe for a month, but for next month you will be paying salaries again. If you have paid insurance for this year, next year you will be paying insurance again. If you have paid the rent, next month you will be paying rent again. Now hopefully you have made your mind. When you have made any payment for asset, that would be made for longer period of time. If you have made any payment for expense, that payment would be made for less than 1 year, and you will be paying payment again and again and again within a single year. This benefit would be for the longer period of time. So you may write here another line to understand it. Payment, or you may write longer period of time, or you can say more than a year. So any product which you have retained or going to retain for more than 1 year, that would be considered your asset. And here the payment which you have made is not for the longer period. It's a payment for, you can write it in bracket, this payment is made for less than a year. Why we are taking so much time to understand two words? Because if you will understand asset, if you will understand expense, believe me, the last page of accounting will also be understandable for you. Not 1, 2, 3 chapters. I'm saying the whole book of accounting would be easy for you to understand if you will having a complete concept about asset and expense. So asset, longer period of time; expenses, shorter period of time within a single year. You are paying some amount for asset, you are paying some amount for expense. This is similarity. So when you have paid some amount for the longer period of time to get some future benefit, it would be considered asset. When you have made some payment for the shorter period of time to operate the business, it would be considered expense. So two elements are completed. Our next heading would be liabilities. So what we are going to do, we will try to understand our third word, and that is liability, which you will understand. So liability is basically, within two words we can understand it, amounts which are still payable. Why we have separated it? Okay, what am I going to do? We will make these two elements little different. So we are marking it in a different way. Let's put a thick border. Okay, asset and expense are two different things, and now we are discussing third element, which is liability, and that is exactly different to asset and expense. Amount which are still payable. That means you have made a transaction, you have received something, but in return you were responsible to pay and had not paid yet, and you had made the promise to pay in the future. This would be called amounts which are still payable, and that would be considered your liability. Example how can we take is bookseller bought books, but he had not paid. He had bought these books on credit. So bookseller have bought books on credit. That means amount had not paid. If amount is not being paid, obviously you will be responsible to pay these amounts in future. So that would be considered your liability, because amounts which are still payable are considered liabilities. So bookseller have bought some books on credit, amount has not been paid and made the promise to pay in future. This is his liability. Another example we can take, if bookseller had taken loan from the bank, for example, from bank. Now obviously amount is not paid yet, you have taken loan and amount would be paid in future. So this loan would be considered your liability. Amounts payable are also to be included as accounts payables. So you can consider it accounts payable. So all accounts payable are liabilities. Let's say bookseller have bought some books on credit from ABC and company. ABC is the name. So ABC would be the person to whom amount is payable. ABC would be considered account payable, and account payable are liability. Hopefully you people have understood the concept of liability. Liabilities are amounts which are still payable, and examples we have taken is when you have taken a loan from bank. That loan is still payable, you are responsible to pay this amount in future. That sort of amount which is burden upon you to be paid in future is called liability, and examples we have seen. Okay, this is our third pillar of accounting we have discussed. What we have discussed earlier was asset, then we have discussed expense, and third is liability, and finally the fourth pillar. As we have said, we will discuss four pillars of accounting. Four is incomes or income. How can we define it? If you are receiving any amount received, it means you have cash in your hand, you have received the amount through how? Through business operations. Okay, you have received some amount through business operation. As we have taken the example of bookseller, if bookseller had sold some books and received amount and get some profit, this would be considered his income. So he is selling, receiving amount. We can write it in our example. Bookseller sold goods and received amount. That received amount would be called your income. Now please try to understand, a bookseller was having furniture at his shop that was bought to get some future benefit, and it was meant to be retained. But suppose after 3-4 years he thought that furniture is not suitable for him. He has sold that furniture as well, and bookseller is selling his books as well. But please make these two transactions very different to each other. Income would be considered when you are selling your commodities, merchandises, or business product, not your asset. When you will sell your asset and will get amount, that would not be considered your income. Income is the amount which you are receiving through your business operations. What we have written is business operations. So when you are getting some amount during trading process or with the help of trading, that amount would be considered your income. As we have said, bookseller had sold goods and received the amount. Another difference you can understand with is if you are earning that income continuously. The word is very important to understand. It is continuous. So you are receiving any amount continuously through business operation, only then you will call it as your income. Now, if bookseller is selling his furniture, if bookseller is selling his air conditioner, so this sort of transaction will not be repeated in longer period of time. Again, you can understand it would not be considered your income. But if bookseller is selling his books, it may be possible he will sell books dozens of times in a single day or hundred of times in a month. That means this activity would be repeated in short term period of time. It would be considered your income. While selling AC or furniture, that activity will not be repeated in shorter period of time. It means selling an AC by bookseller would not be, please make your mind, would not be considered income. Only in that case, if bookseller is receiving any amount and that has a continuous procedure, only at that case it would be considered as income. Another example we can take is if bookseller receiving or received interest from bank account. As you know, he is receiving this interest continuously. After each month he will be receiving interest. It would be considered income. Bookseller received rent. Let's say a part of shop has been let out and he had received rent. Obviously, after within the next month, he will be receiving this rent again. Each and every month of the year, he will be receiving rent. It means it has a continuous procedure. You can see over here. Continuously, he is receiving the amount of rent. It would be considered as income. So when bookseller will sell his furniture, it would not be having an element of continuity. He will not be selling furniture continuously. That would not be considered income. In case if he is receiving any amount again and again in shorter period of time, then it would be considered your income. So these are next, third and fourth pillars. We can make this part separate to the first part, and here we have discussed four elements: asset, expenses, liabilities and income. And next, just one more word we will discuss over here. This is not the pillar of accounting but very important: commodities. Now we will discuss commodity. It is also called merchandises. Commodities, merchandises, or these are called goods. Okay, commodities, merchandises and goods are the business products, trading of whom any businessman is doing. Any product which is trading product is called commodities. So goods which are bought for selling purpose are called commodities and merchandises. So what you can see, what you can write is all valuable things which are bought for resale purpose. These are called commodities. Example, since we have taken example of bookseller, so bookseller, if he is bought, okay, ठीक, books, that would be commodities. If instead of bookseller, we are taking example of cloth merchant. If cloth merchant bought books, oh sorry, cloth, that would be commodities or goods. If cement seller bought cement, that would be commodities. If fruit seller bought fruits, that would be commodities. Now you can understand it well. All these are examples of commodities, merchandises or goods. If bookseller had bought goods, why he will be buying these books? For the purpose of trading, for resale purpose, what we have written over here. If cloth merchant has bought cloth, what could be the purpose of buying cloth? He will be selling it in near future. It means cloth merchant will buy cloth for resale purpose. These so cloth would be considered commodity merchandise or goods for cloth merchant. And cement seller is buying cement. Why he will buy cement? Just to resell it in future. So cement for cement seller would be called commodity, merchandises and goods. Fruit seller, why he will be buying fruits? Just to resell it in near future. So fruits are to be considered goods, merchandises and commodities for a fruit seller. So this is the fifth concept we have discussed, and we can keep it separate, just marking it as a separate concept. So I'm very hopeful that few of the things you have understand. We have discussed five major things. The very first thing which we have discussed was assets, valuable things, not for resale purpose, basically to retain in the business to get some future benefit. Expenses, payments you have made to operate the business, liability amounts which are still payable, and incomes, the amounts which you are getting through business operations. If you are getting any amount not through business operations, rather you have got that amount rarely to be repeated in a single year, that would not be considered your income. Income is the amount which you are receiving continuously through business operations. Example we have seen, if bookseller is selling books, that means that would be considered his income. So instead of goods, we may write over here, if bookseller is selling his books. All right. And then lastly, we have understand commodities, merchandises or goods. It's a technical word used only for those valuable things which are bought for the resale purpose. And so many examples we have seen. If bookseller is buying books, those books have been bought for resale purpose. So books are commodities, merchandises and goods for the bookseller. I'm requesting you to please note down everything, and secondly repeat these concepts continuously. We will discuss again and again and again. Even if we are studying last chapter or we are studying a mid chapter, we will definitely be involving these five concepts in any chapter. All rules and regulations regarding accounting are closely associated with these five concepts. I'm requesting you to please note down and start your search again. See several books present in your course outline, or you may research online and understand these five words closely. For the time being, we are closing this lecture. How we have understood these five concepts? Just literally, we were using common words. We were not using any technical sentences. We were not using any typical bookish wording. These were ordinary words and very simple sentences were used to let you understand. Please comment, and you can text if you feel any difficulty. If you haven't understand anything, you can text me, you can message me, or you can comment over here, and I will surely be there to explain your difficulty or to explain your query, and hopefully your query would be solved through messaging, texting. Thank you very much for your time. We will be meeting soon again for an understanding of any other uh, operation, any other title or any other concept in accounting. Up till then, please take care of yourself. I'm requesting you to pray for me as well. For the time being, let's take off. Thank you very much. Bye. Allah Hafiz.